The S&P 500 actually entering bull market territory now, climbing 20% since its lows in mid-November. So is the present narrative enough to reinforce a steady grind higher, or will the market require a fresh catalyst? Let's get over to Larry Shover, Chief Investment Officer at SFG Alternatives. Larry, wonderful to see you there today. Bull market territory for the S&P. Has there been much chat about there over in Chicago this week?
Well, right now, the market's quiet and trendless. I mean, it's hard to believe we're making these record highs and people are just confused. They're worried. I mean, every tick in the S&P, every movement in the S&P is under the utmost of scrutiny right now. Everybody's asking, what's next? What do we need to do to get this market going higher? Why does it keep going higher? When actually, Kate, I think they're asking the wrong question. I mean, I think we're going higher, as your other guest said. You know, if rates are at zero, we're out the financial repression system. People have to buy something. We have a euro column going on with no big headline risk going on. So the market just carries on.
And a fresh catalyst in May could be a big ask. There's not much on the calendar.
Yeah, you're right. There's a dearth of information, and actually, it really, the catalyst almost has to come from the bears right now. And there's a lot of bears right now out there. I mean, every day we go higher and higher. There's more bears. People are just unwilling to accept the fact that the market's continuing to grind higher. So given the fact that we have reasonable valuations in the U.S., given the fact that corporate balance sheets are pretty good, and the other things I mentioned, that is the catalyst that's causing the market to do what it's doing. So something bearish has to happen to unwind all that, and it will unwind very quickly when that happens.
Larry, Mark Todd from FIG here. We're reading some articles today in the paper about the US bond market in terms of the high yield bond market. I think used to be called junk bond market, but the high yield market is now trading below 5%, which seems incredibly low rates. From a historical perspective, is it just a lack of assets at the moment?
Yeah, Mark, I think you hit the nail on the head. There's just lack of supply right now. And so below 5%, you're right, that's tragically cheap. But just given the amount of liquidity that's in the system right now, people are just grabbing at anything. I mean, this is a little bit different, but somewhat similar. When I look at Italy and 10-year rates in Italy and Spain, you know, at or below 4%, is that cheap? I think so. But, you know, it's just people are putting their money to work somehow.
What about the US debt ceiling? It's been suspended now until Sunday, May 19. Is this likely to become a bigger issue in the weeks ahead, Larry?
You know, I don't think it will, and not many people are actually talking about it. I mean, it seems like most recently we've seen both sides of the aisle coming together on this. I don't think anybody wants to see something tragic happen to the economy, especially with the debt ceiling. Also, keep in mind, you know, we raise taxes here in the U.S., so there's more money in the coffers, and the Treasury actually has built in more emergency measures. So I don't think it's going to be the catalyst that it was last year or the year before.
OK, Larry, just finally, I did see a call from an analyst who's known quite well over there in the United States. And he was making a call, I think, for, I'm just trying to bring it up now, for the S&P to reach some pretty extraordinary highs by year end. I'll bring it up in a moment. But just what do you make of those kind of calls? Do you see some significant gains ahead for us just this year?
Well, right now, I don't think, I mean, I just can't imagine. I mean, we can go higher. Let's get that straight. I mean, I do believe we can go higher. But where I get nervous about everything is that we can't absorb a negative shock in the system. And we haven't had a negative shock in quite some time. Right now, equity multiples are 14 times. It's gone up once since the end of December. So as we continue to grind higher, it gets a little bit more scary because we just cannot absorb any kind of negative shock. So I think we definitely need to see some type of growth metric somewhere, somehow, for the market to make those kind of highs by the end of the year.
Larry, it was Lazio Barini. I don't know if you've heard of him over there. I think he's quite big. He made the call for the S&P 500 index to move above 1900 by year end. That's not a 6, that's a 9. That must sound extraordinary to you.
It does, but, you know, usually people remember the extraordinary. I mean, people don't remember just everybody that's in the herd. So if he's right, he'll be a hero, and if he's not right, everybody will forget about him.
OK, Larry Shover, thank you so much. Always appreciate your time on the program.
You're welcome.